for this, again, keep things short. We're going to just abbreviate our introductions very quickly here and get started with the Q&A. Kind of keep people very interested in what's going on here. Obviously, a very exciting panel tonight on offshore economics. You know, when JC asked me about this, I thought it was very interesting, especially during OTC week. But the truth of the matter is that the past few weeks or past few months, a lot of the economics, a lot of the attention has gone to onshore. So for a chance to talk about offshore economics, I thought this would be a great forum to kind of delve in and find out where we're at in that arena. So I think we'll all have questions, we'll all have ideas and things we want to talk about. We'll keep those for the end right now, but we'll start off with a few questions, just a little bit on the basics right now. I think we have a very good panel here. Everybody's oil and gas, everybody's economic background. I think we all have bios on everybody, so again, we'll shoot right to the first thing. So I think I want to start off with some of the talk we heard earlier. I want to just throw it out to the panel right now. What are your thoughts about onshore and offshore economics? Do you think there's opportunity out there for offshore as much as there is onshore right now? All right. Let me start off. There you go.
One of the things that, pardon me, Ms. Foss mentioned was the reason to be, trying to remember the word that she used, but be pragmatic in terms of the actual oil price that you can expect. I heard not too long ago the CEO of Exxon say that he's going to continue to evaluate his projects at $100 a barrel of oil. And while $100 might exist sometimes, I think we have to get to the realization that we have one of the world's largest oil fields up in Canada that makes money at $65 a barrel. We've got a whole bunch of, we'll have a whole bunch of onshore unconventional stuff that apparently goes like gangbusters at $100 a barrel, does pretty well at 80, is really hurting at 60. Given that environment, I'm not sure that a large offshore development is going to make the rate of return at $100 a barrel that you expect. That is, I don't think you're going to see the $100 a barrel over the long term. I think you might see it at 80. If you can sell forward, so be it. But I think you have to look at what, not necessarily the low-cost producer is, but a big marginal producer, and that's half a basket.
Do you have any ideas?
Yeah, I'll chime in real quick. Probably the biggest thing when it comes to onshore right now, and that's one of the things that Michelle alluded to earlier, is innovation and cost reduction. The thought here is that what if $70 becomes the new 90? And the reason is because you're seeing a lot of costs come down. You're going to see those first in the onshore because the onshore is where the blood was created, and that's where we see a lot of the response come in first. We're in the first quarter. We're already seeing operators talk about 15 to 20% reduction in costs. That makes the new oil price very different. You might not need 90 bucks. You might actually need 70 to just get the same rate of return. You won't see as quick of a response on the offshore, on offshore assets for quite some time for obvious reasons. The assets are larger. It's going to take more time for these costs to kind of seep in. So first it will happen in the onshore. That's where the opportunity is now. And then the offshore, we'll see where the market resets in the next year or two.
My point of view may be a little different. Most international oil companies have a big slate of projects which have been trying to develop and examining at a range of prices. 100 for sure, sometimes higher, and most of the times they made sure the projects would fly at 80 or even 60. Companies have been pushing back some projects to find new way to re-engineer the project so that the cost comes down enough to be able to launch it. There are a couple of examples of that. Total with a Cambo project. Initially, it was a $14 billion project. Between the time, that was back in 2009, it was first presented, and the time the engineering companies presented their prices, it had swelled to 20 billions, and Total said, no way. We will come back to the drawing board, and we will cut some costs, and at some point it will fly. That was launched last year, and the cost is 4 billion less than it had inflated to. BP is an interesting example as well. They just launched a big project offshore Egypt for, I think, $12 billion. And I don't believe they would launch such a large project if that didn't have a return at the current prices. They are, well, they actually said last week that they were thinking about sanctioning the Mad Dog Phase 2 project after maybe 3 years of re-engineering of the projects to take the cost down. And what I see is our services companies working a lot to help companies get a hook of having personalized solutions and more into standardized solutions to get cost lowers. And if they manage to do that, I believe that some interesting projects offshore will be developed.
Pretty good. You know, it's interesting that where this conversation is going, just the answers to these questions. It reminds me, Alan Greenspan used to have a story he'd love to tell over and over again. He said that when he was head of the Fed and he'd get on an airplane with Ronald Reagan, or anywhere with Ronald Reagan would say, Alan, I got this great story I want to tell you. I was meeting with Yeltsin. Yeltsin said, I want you to come see my military parade. I've got this great parade. They do it every year. I want you to come see how powerful Russia is. So Reagan said, fine, I'll come see you. I'll come see. He comes to go see, and sure enough, the parade starts. There's marching troops, hundreds of troops going down, carrying their guns. Then all of a sudden, there's tanks. All these tanks are going down the road. And he says, geez, Boris, these are very impressive. He goes, it gets better. Then all of a sudden, trucks come pouring these huge missiles, huge, and it goes on and on and on. And it looks like it's ending because all the trucks are gone. There's nobody back. And then all of a sudden, he says, wait, it's not over yet. There's about 5 or 6 guys coming down, walking down the thing. They're all dressed shabby, not very good suits. They're all carrying notebooks. And Reagan goes to Yeltsin, who are those guys? He's like, that's our greatest weapon. Those are our economists. So my point is that economists in the economies and you know, economics, just in general, is a global picture. You know, and that's what we tend to forget, is that there's a lot of things right now we're talking about offshore that's just not about the U.S. When we talk about break-even points, we talk about lower prices, and we say, oh, it's uneconomical, what we're really talking about is the U.S. But I'd like to ask the panel what their opinions are on the global offshore position right now. How bad is the U.S. compared to the rest of the world, and how bad is the rest of the world right now when it comes to offshore economics?
I would say the economics of an offshore project depends not only on the costs, which is the numerator, but on the denominator as well. How many barrels will you produce? Brazil was lucky enough to discover lots of oil. I was at lunch at the OTC today where you reminded that about 46% of the oil discovered in the last 5 years was in Brazil, and 60% of the deep offshore discoveries were in Brazil. If you have a field to develop with, you name it, 6, 10, 12, 14 billion barrels of oil to develop, your cost will be quite low anyway. For the Lula field, it looks like what Petrobras says. I'm not sure you have to trust everything Petrobras says, but they say it flies at $34 per barrel. So at 50 or 60, that might go. The Libra field, for which Shell expect to have a final investment decision by the end of this year or the middle of next year, is even bigger. So with a bigger denominator, we should normally have some kind of projects which fly. So you would have to look to develop the very largest discoveries. There was one in Norway 3-4 years ago. I don't have a name out of my mind yet. But I think these regions, and particularly project by project, you have some very large discoveries which I believe can, with enough standardized solutions, can be developed.
So you think that with the economics of offshore, you think it's still going to be much more profitable than trying to drill anything onshore in Europe or China or Russia or South America?
While trying to develop something onshore in Europe,
This can be seen. That's right. That's not how you ideas there.
Yeah, so I mean, when you're looking at both offshore US and offshore international, you're going to have to balance a couple of things in the next couple of years. One is that the geopolitical situation overseas has become very ugly. We've seen a couple of offshore assets that are having a lot of trouble getting developed, like in Brazil, for example, with all the corruption that's going on there. Look at offshore Israel, there's trouble there as well. That is going to be offset by better fiscal terms. Now that oil prices have fallen quite a bit, and the take for the oil and gas companies is going to be better. The US is still by far one of the safest places to invest. And I think that companies, what they need to do if they want to be smart and want to think about the long-term benefits or the long-term sustainability of their business, is that they're going to have to diversify. Both offshore US, offshore international, and if you can mix it with onshore assets as well, that's even better.
Doctor, now you mentioned Canada, and I'm going to help. I want to direct this question strictly North America with you because you mentioned Canada. What are your ideas about Mexico and offshore?
It just so happens I've been the portfolio advisor for Pemex exploration for about most of the last decade. They have a huge prospect inventory. The problem is that the government has treated Pemex like a piggy bank, and therefore they haven't been investing in the infrastructure and doing it. Whether or not there will be shared infrastructure, there has been some rumors that there might be some companies who will own the pipelines to facilitate investment. That is, you know, one of the sticking points seems to be, well, you've got to own the oil if you're going to invest in it. Well, if you're happy to own the pipeline, then you might have a way of getting in. There is a great potential for fracking gas. The Eagle Ford carries on down into Mexico, so they've got the oil and gas onshore, but they've got an offshore environment that is still promising. They simply need to have the political environment to be able to get at it.
Very good. Okay. We're past the 8 o'clock hour, so I'm going to turn this over to the crowd real quick and see if there's any questions we can start with out there. Any questions for our panel? Yes, sir.
Yeah, don't you think the Mexican reform will help the development of the offshore in Mexico? I mean, they're going through round one right now.
Yes, they are. Well, there was a round one onshore as well that was selling rather limited stuff. And they're certainly doing more. Whether they're doing it fast enough is another matter. On the other hand, and I still don't think that they're giving up the reserves themselves, are they?
Yes.
They are.
The
So in that case,
Constitution was changed, that's part of the reform.
then if they've done that, then that's certainly on the way. One of the things when we're talking about U.S. versus international, the U.S. is traditionally a tax royalty regime. When you're in the international place and you're dealing with profit sharing and production sharing agreements, you can be more protected against downturns in price, which can help a lot. So there's that too.
Okay. Another question? So, yes, sir.
So the economies of scale for the offshore developments are, this is directed to you, Hassan, you think they're similar to the economies of scale of the onshore developments?
No, I mean, overseas it's generally been more expensive to do an offshore development tit for tat, but kind of like Stephen is alluding to, there is on the purchase agreements, the PSAs, there are protections. And then one thing you would notice is that cash flow on overseas projects is usually very, very positive. And actually some of the companies that I cover report some of the best cash flow coming in from overseas offshore. They have the protection on the PSAs now that prices have fallen. That means they get greater take and they can kind of buy a little bit the decline in price. The only problem is that overseas is that the geopolitical issues a lot more pronounced than they are here in the States.
Yes, but
So
I
you
think-
have to balance those together.
I'm not disputing offshore overseas versus offshore US. I'm
Okay.
disputing land overseas. The
Onshore?
Onshore, Azerbaijan, Indonesia, Nigeria, Venezuela, Colombia, with their political problems.
Sure.
And offshore Gulf of Mexico, there's very limited amount of offshore plays, right? And besides the US, offshore Angola is not a very nice environment,
Sure,
right? And it's
sure.
extremely expensive. So
Sure.
when you start playing economies of scale, won't the majors, won't the international oil companies, won't the state oil companies that have become international, like Repsol or Statoil, won't they be going to the land where the cost per barrel is much smaller, and you can develop 5,000 wells versus 4 wells at $200 million each?
That's a great question. I'll tell you my answer to that is that it's probably going to be on a case-by-case basis. When it comes to the majors and most guys that are looking mostly for scale more than anything, over the last, I'd say 5-6 years, you've seen them invest in both, onshore on massive scale projects, and you've seen them invest heavily in offshore as well. You've seen them in LNG as well. So it's definitely on a case-by-case basis, and it's kind of very difficult to generalize that answer, but yeah, it has to be looked at on each individual item. But the bigger the project, the more that you can achieve scale is the thing that's mostly interested to the majors so that they can replace their reserves and show that their numbers keep going up and their production going up. That's probably the most critical thing for them.
I may add that Repsol has been a good example of a company going onshore and unconventional, buying Talisman actually. They are increasing very widely their portfolio of assets in onshore US and Canada. And onshore US versus onshore international, the US has a unique infrastructure of oil services, and drilling a well and you get to drill hundreds of thousands to get a good production in unconventional costs 2 to 3 times less in the US than anywhere else in Europe or in South America, in Argentina. YPF has costs which are perhaps twice the cost of the US. Recently I read that, I don't remember, with the US service infrastructure, the Vaca Muerta would be producing maybe 10 times what it's producing right now, because the costs are not
I would like to just voice the possibility. We talk about the geopolitical situation, that I think fracking rigs rising in Poland and Germany will probably give a great deal more consternation to Russia than with missile batteries. Break the Gazprom monopoly on Europe. I think that would have an immense political leverage.
Yeah, just before I answer your question, I just have one more thing to add to that on my own behalf here, is that when you talk about onshore versus offshore, especially in countries like Angola or Indonesia is one, or even Asia, anywhere in Asia, then it's a lot easier to move fish in the water than it is people on land. You know, America's the only place in the world where we give people rights to oil. So therein lies a big problem. You know, we can take away your fishing areas, but we can't take away your land without an uprising or a riot. So that's where a little bit of problems come in, and that's where the economics really get thrown out the window because there's not much you can do. You can't, even though there's oil down below any kind of land, you can't move families. I think it's that problem in Europe right now, right? Is that the way it works? But yes, please, next question.
No, yeah, I just wanted to expand a little bit on that in terms of talking about Europe and resources and I guess onshore Europe, right? Poland's been very disappointing, very expensive, very, very tough to crack. Germany, sort of, we're heading that way too. France, it's impossible to drill or even explore. UK has limited resources. There's a lot around that story of breaking the Russian monopoly on gas in Europe. Is that even a reasonable assumption to make? I mean, given the current situation, doesn't look like much is going to happen. I mean, what are your all three of your thoughts on sort of the European onshore story? Is it going to materialize? Is it not? Where are we at?
I'll answer you a couple of quick things. Going to Carl's point, mineral rights is huge. That's something you have in the States that you don't have overseas. In addition to a couple of things, you have the rigs here, you have the expertise and the knowledge of shale, you have the fiscal systems in place. It's not one thing that created the shale boom in this country, it's several things all coming together. Europe has definitely fallen way behind, and where prices are today, there's very little incentive for any E&P operator on any scale to make meaningful strides within shale in Europe. The question of whether or not we replace European gas demand from Russian supply, if we're able to displace that, the only solution that would potentially come from is LNG from the States or Australia, which is not going there, it's going mostly to Asia. The other area that hasn't been fully developed is Mozambique. There is a lot of potential for that gas to go to Europe, and potentially Israel. These are probably the biggest suppliers that have not yet fully come online that could provide Europe with, or could compete with Russia for supplying gas to Europe.
If I may,
Sure.
I would say this. Statoil has actually delivered, and is delivering gas, so not onshore, but offshore gas to Lithuania now in order to kind of make sure the quote-unquote Russian blockade is lifted. So it's not only, I think, onshore. It's possible to use Norwegian gas, for example, and it has been done. So it's not something theoretical. It has been done earlier this year.
But is it big enough to supply most of
It's
the
big
major
enough
economies?
it's big enough to support Lithuania.
Okay.
Okay, but for those people, this is extremely important because they have a history with Russia. They don't want to be repeated.
Sure.
You know. So
No, you're absolutely right.
I think there are some solutions. It depends as well on the economics.
Right. It has to be economics, and then it has to be still the major consumer is Western Europe of Russian
If
gas.
I may just ask a question, it would be linked to actually the North Sea, to you guys, in terms of the offshore, because we speak about the geopolitical situation and all that, which is actually something very important. But the cost situation is important as well, and my understanding is that the offshore cost in the North Sea can be pretty high. So what would be your, I would say, your take as to how the North Sea, the offshore North Sea is going to compete with other offshore locations in the world?
It's quite hard. The unit costs in the North Sea are probably the highest in the world because of the security standards in Norway are so extremely strong. No, that doesn't impeach Statoil from to develop a very large field, the largest discovery in 30 years. Some other projects they had, one called UN Transberg, I think, have been delayed because of the costs, and you had several projects delayed. Now the UK just changed the tax, reduce the tax. This, of course, helps developing projects when you know that tax represents about 60 or 70% of profits in UK, and
I think above 80 in Norway. Tax is a big part of the equation in Northern Europe.
I'll echo what Jean-Luc said, same thing we see. The other thing is that the North Sea is a lot more mature, and in a world where the opportunities are very, very rich, you want to go where you have a higher chance of success. The North Sea is no longer that maybe 40 years ago, but not today.
I don't have anything else to add to that.
Okay, yes.
Yeah, the speakers alluded to Brazil, pre-salt offshore, and also West Africa offshore. And some of the more recent developments in West Africa are in provinces that are kind of analogous to Brazil offshore geologically. Just kind of wonder if you guys can provide any color in terms of what the economics are of this new pre-salt West Africa versus Brazil, both pre-tax and post-tax.
I don't have those numbers.
No, just, you know, just qualitatively speaking, higher, lower, what are the risks involved?
My understanding is basically the geology is the same because it's the pre-salt came from the opening of the ocean between West Africa with Southern Africa and Brazil. Now the drillings, except for cobalt energy, which has been quite successful, the wells have been disappointing so far in Angola. Total, Statoil, others have had dry wells. So the prospects of finding as large reservoirs as were found in Brazil are maybe more remote, but of course you got to read more to find probably the first 30 or 40 wells in Brazil pre-salt back in the 80s were dry, and then all of a sudden with the progress of geosciences they found those huge reservoirs. You probably got to explore more in West Africa before you find the big elephants that can be developed. Of course, in the $50, $60 world, it might take more time to do that.
Okay.
Thanks.
We're right on time here. We could probably wrap it up right now. We again thank everybody for coming. Thank you for your questions. We still have a few more minutes here for a little networking. Is that right, JC?
Yeah, sure.
Very good.
Network as much as you want.